Hello traders. So today I want us to do an update of the weekly outlook video that we did on Sunday. So first of all, if you're new, welcome to the community. My name is Sharon Kessiotrades. I'm a trader and a mentor. Subscribe to this channel and hit the notification bell so that you can get an update anytime I do a video. So when we are doing the weekly outlook, first of all, we're going to start with the DXY, the dollar index, and this is what we had forecasted. We want to see either we get a bearish move from here or we get a bullish move for DXY. So now, as you can see, Monday today we had all this drop. And if you look at this point here, you can see there's a daily fair value gap. So if you were to take your fib and mark from this low to this high, you'll realize that this fair value gap is at the 50% of this range. So right now, this fair value gap here is at a critical level, or this is a very important level. So if dollar is bullish, we anticipate that this daily fair value gap will be used to push price higher, and we should be anticipating a bullish order flow for dollar. However, if the dollar is weak, so we are going to remove this. So if the dollar is weak, then we would want to see the market invert this daily fair value gap and now use it to push price lower as an inversion fair value gap. So I want us to look at the weekly time frame. So we normally say that we trade with a trend, right? And if you look at this trend and this order flow on the weekly, clearly this market made a low, had a retracement, and then there's this lower low that was formed. However, when the market was forming this lower low, because this is a break of structure at this point, you can see the market took this low, but then we had a wick. All this wick is a rejection, and we had a candle body closure above the open of this weekly candle. So when you look at such price action, this is the kind of price action that tells you something is happening. And at this point, you just don't blindly trust that this market is bearish. Because normally, if this market is bearish, and the market has made a lower low, we anticipate a retracement to an internal range liquidity, which is this fair value gap here. I can see there's a weekly fair value gap here. This would be nice. A retracement to this internal range liquidity, and then you expect more bearish moves. But at this point, we are not expecting that. We're at a situation where we see how the market can still be changing momentum, and we're likely to see a bullish move. If we had a candle body closure, or we had bearish, full bearish candle bodies, then at that point, without a doubt, we would say a high probability is after the market tags this weekly fair value gap, we should expect more bearish moves. But at this point, we do not have that high probability anticipation that this is just a retracement and then we continue lower because of this price action here. So guys, if you enjoy how I do analysis from the higher time frame all the way to the lower time frame, I teach all these in the 6-week bootcamp that I normally have every month. Just check the link in the description box to sign up for next month classes. So next, I want us to look at USDCHF. You all know USDCHF and the dollar index are positively correlated. Okay, so far, I want you to see this. So all this move here is just consolidation, and this is the weekly time frame. So what do you see? Consolidation. Then this can be a nice manipulation. So if you're going to have a bullish dollar, then this would be a perfect expansion. So accumulation, manipulation, then distribution. Okay. So I want us to look at the daily time frame, and if you look at the daily time frame, this order block here should be our last line of defense. If this market is bullish, the market should use this order block to push price higher. However, if this order block is violated, which you'll also see, chances are right, also DXY, you'll see the market is violating that bullish fair value gap, then there's a high probability then the market is going to give us a bearish move from there. Because if we violate this and you get another bearish move, from there, anticipate more bearish continuation. That is a high probability. So if we look at EURUSD, we did a perfect, complete analysis. We looked at this fair value gap, and I told you guys, if price taps this and the market is bearish, then this should be used to push price lower. However, if this gets violated and we get a candle body closure through it, and of course there's an order block here, which you should also see. You'll just know most of the time this is the important one. If this gets inverted, then there's a high probability that this market will be bullish. And of course, we will look at also DXY. DXY will be doing the opposite. If DXY is bearish, then EURUSD you should be expecting bullish moves, and also GBUSD you should be expecting bullish moves.